Is it time to sell Bitcoin mining stocks? I know a lot of you might be shocked to even hear those words uttered out of my mouth because I've been beating the drum on owning Bitcoin mining stocks since the end of 2022, and it has treated us very, very well. However, the reason I'm even considering the possibility that it might be time to sell these companies is, well, it's because Bitcoin is now down more than 20% from its all-time highs of $73,000. Today, Bitcoin's only trading at $59,000. I don't say only lightly. I realize it's up significantly from the $20,000 per Bitcoin that it was at just not long ago, just months ago. But this really only tells you half the story, where if I pull up this chart here, you can see the average Bitcoin mining stock year to date is down 33%, while Bitcoin itself is up basically 50%. If you didn't put all of your eggs into one basket, into a company called CleanSpark, which fortunately is what I did, you have felt immense pain year to date. Outside of CleanSpark, a lot of these companies are down 20, 30, 40, or 50% plus year to date. That is immense pain, and that's not a favorable dichotomy between the performance of these Bitcoin mining stocks and Bitcoin itself. In fact, that is terrible performance. That is the exact opposite of what you expect when you invest into these companies. If you invest into these stocks, you would expect if Bitcoin goes up 50%, you would expect your holdings to go up 150%, if not 200% or more. So this is not a good scenario that's been unfolding here for Bitcoin mining stock investors. Now, one thing that I think everybody needs to realize is that right now, the way things are right now, and this can always change, but right now, Bitcoin mining is not a good business model. You have to spend millions of dollars, if not tens of millions, if not hundreds of millions of dollars upfront to even be somewhat relevant. And then to stay relevant, you have to keep spending millions, tens of millions, or hundreds of millions of dollars, again, just to stay relevant. It's a never-ending arms race. And guess where that money comes from? Well, it comes from shareholders via dilution from the companies that hold on to their Bitcoin, or it comes from companies selling their Bitcoin just to grow more so that they can sell more Bitcoin to grow even bigger. It's a never-ending cycle for these companies. And, I give the creator of Bitcoin a lot of credit with this. That's the way it was intended to be. And it's actually a very healthy thing. But for investors in the public space, are these companies good investments? Well, right now, based on hash price, mining Bitcoin is the least profitable it has ever been. Again, that can change very quickly, but that is a fact. It is the least profitable that it has ever been. It is also the most heavily diluted industry in the entire world. In the entire stock market, there's no other industry that has this amount of shareholder dilution. And again, if the companies choose not to dilute as much and they sell their Bitcoin as a result of that, well, that means that they miss out on the potential upside of Bitcoin that you would receive if you hold on to your Bitcoin. Now, a time period like this isn't as rare as people think. I've been a part of this space for 4+ years now. It's crazy to think. But there have been numerous time periods in the past where Bitcoin mining stocks significantly underperformed Bitcoin itself, and eventually it always corrects itself. And I think that's because it's kind of a self-fulfilling prophecy. If investors believe that they can get leverage return to Bitcoin by owning these stocks, they will get leverage returns because everybody is buying them in hopes of getting leverage returns. So those leverage returns come from all of the buying pressure. It's a self-fulfilling prophecy. Could that change? Absolutely. And it seems like every time a time period like this comes around, there's more and more skeptics that enter this industry and say, ooh, Bitcoin mining stocks, they're way overvalued. What are we thinking here? And, this is kind of the problem with investing into Bitcoin mining stocks. It's that depending on what your future price for Bitcoin is, the investment opportunity here can change dramatically. You can have two different groups of people that completely disagree and come up with completely different conclusions, and they could both be equally right. What I mean by that is, if you believe Bitcoin is going to $1 million by 2030, like I believe, then owning any of these companies listed on this chart here will prove to be a great investment long term. No matter who says it's overvalued today, They are clearly undervalued if Bitcoin goes to $1 million. The problem is there's no guarantee of that happening. And based on the other group's opinion that thinks Bitcoin is going to stagnate here, going to stay below $100,000 per Bitcoin for the next decade, or even go back to $10,000 per Bitcoin, well, they could be right as well. If Bitcoin does what they think it will, they could be absolutely right in saying these companies are massively overvalued, rather than the other group that says they're massively undervalued based on what you believe Bitcoin will do. That is a huge problem with this industry, and analysts get this wrong every single year. Based on their input for the future price of Bitcoin, they could project that a company is going to grow their revenues by 100% next year in 2025. If Bitcoin doesn't go up to their target, their revenues could actually get crushed 50% next year in 2025. This is why it's so hard to value these companies and put a proper value on them. The volatility of Bitcoin itself, the relatively young nature of Bitcoin, and how far it is up the S-curve. It's not very far. This is a young, new technology. There is lots of unknown, which makes the investment opportunity interesting at a minimum. But if that unknown doesn't go our way, then we could feel a lot of pain, and we could waste a decade of our lives if Bitcoin doesn't go up. And I do think that's just a mental hurdle that investors have to get through. They have to get over it. That when you invest in Bitcoin mining stocks, you're not really investing. Sure, anything you put your money into with hopes of making more money on your investment, that's an investment opportunity. But what you're doing in this space is actually speculating. Now, there's a big difference between speculating and gambling. Speculating, you like your odds better because you've done the research, you understand it better, whereas gambling, there's always less than a 50% odd of you winning that gamble. Speculation can be much more lucrative, right? But it's still extremely risky. So why does investing into these companies even interest you? Why does it interest me, I guess is what I should say, how I should phrase it. Well, it's because of the potential return you could see in these companies. It's very similar to the gold mining stocks themselves, where these companies go from very, 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 very cheap, undervalued and too cheap, to very, 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 very pricey and very, 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 very overvalued. That can happen in the snap of a fingers, and that is volatility, and that is beta that you cannot find anywhere else in the market. Again, though, you're speculating. You're speculating on a company that is speculating on the price of Bitcoin. So that added dimension of risk is why Bitcoin mining stocks will always be leveraged plays to Bitcoin. I don't care what this shows us, what this tells us over the short term. These companies will always be leveraged plays to Bitcoin because of that fact. Now, let me explain to you the other problem. The other problem with valuing these companies. Investors don't realize that although the business model really sucks, it's not an attractive business model, just like a gold mining company doesn't have an attractive business model, it doesn't matter. And investors don't realize that, but it's a mental hurdle you have to get through. What matters is actually risk appetite of the overall investor. What matters is the amount of liquidity in the system. What matters is the amount of fear and greed amongst investors in this space. Don't believe me? Look at the chairman of CleanSpark, the company I own, and I'm not just picking on Matthew Schultz here. Every executive team in this space does this. What is he doing? He tweets out about Jerome Powell. Gaining confidence to cut will take longer than thought, and how that is dovish. A cut is not a hike, and the market was prepped for the worst. The executive chairman of one of the largest Bitcoin mining companies in the world is fully concerned with market dynamics, the amount of liquidity in the system, interest rates, and the amount of fear and greed amongst investors, because he knows that those three variables matter much more to his stock price performance than his actual business operations do. Now, don't get me wrong. Don't hear what I'm not saying. The reason CleanSpark has outperformed every other miner is because they went from a company that was doubted by everybody. Everybody doubted they could succeed. Everybody doubted they could execute. Everybody doubted they could grow, and they've done the opposite. They have proven they can grow. They've proven they can execute. And they've proven they can do things the right way. And their operations are better than everybody else's operations. And in my opinion, based on my research, it's really not even close. So do operations matter to a certain degree? Absolutely, they do. But the major variables here are what I just discussed. Fear and greed amongst investors, risk appetite amongst investors, and also the amount of liquidity in the system. It just so happens that as bull markets mature, investors start to look for even more return. 6% in the S&P 500, not good enough. Can I get 10% somewhere? In every single bull cycle, this is just the way it works. Investors choose to take on more and more risk as the bull market matures. And this inevitably leads to investors becoming over-leveraged, taking more risk than they should, and then they get flushed out of the system. We saw it happen in 2022. That will happen again. So I actually think when people try to use historical valuation methodology for these companies, they're wrong in doing so, because based on their inputs, I don't care. Based on your inputs, it can give you two different answers, and each answer could be just as likely to happen based on the price of Bitcoin alone, which is extremely volatile. What I like to do, and what I've started to do, and I started tracking this a long time ago. I've just recently started to pay more attention to it because it makes more and more sense in my head. What I've started to do is actually track the amount of risk appetite amongst investors, track the amount of greed and fear in this space, and I'll show you what I mean. I'll bring up the actual Excel spreadsheet here in a little bit, but what this chart shows you is the amount of fear and greed as well as the risk appetite amongst investors in the Bitcoin mining space currently. For you to really understand what I'm showing you here on the screen, you have to understand my formula and how I came up with these numbers. What I've done is I've taken the 14 largest publicly traded Bitcoin mining stocks, I've added together their total market cap. So each individual market cap for each individual company, I've added all of those together, came up with a total sum, and I've divided that by the amount of Bitcoin remaining to be mined and the value of that Bitcoin that's available to be mined. This isn't pretty because, again, I've only used this for my own purposes. I'm going to make this available to all my paid monthly members here after I upload this video. If you want to join my membership, hit the join button located right next to the subscribe button, or hit my Patreon link in the pinned comment. I don't take sponsorships. I'm entirely self-funded, so your monthly support means a lot to me. But this kind of breaks this down for you a little easier. The current Bitcoin supply, so the amount of Bitcoin in circulation right now, is 19,692,737. The remaining Bitcoin supply, so this is the amount of Bitcoin that have yet to be mined but will be mined in the future, is only 1,307,263. At a current Bitcoin price of $59,000, give or take, this means that the notional value of the remaining Bitcoin that can be mined is $77.5 billion, essentially, which is a lot of money. Now, my other input is, again, entirely factual. Sure, I still have to make some assumptions, but these assumptions are way less variable than the price of Bitcoin is, for example. I take the current price of Bitcoin, the current market caps of these companies, and the current amount of the total Bitcoin network that these companies, these publicly traded companies control, which is 21% right now. 21% of the total Bitcoin mining network is controlled by public companies. The other 79% is private entities. Over time, I expect those two to meet more in the middle at 50-50. But these are my inputs. The current Bitcoin supply, which is factual. The remaining Bitcoin supply, which is factual. The current Bitcoin price, which is factual. And the total network controlled by publicly traded companies, which is factual. So again, what I've done is I have summed up the market caps of the 14 largest publicly traded Bitcoin mining companies. I have taken the 21% network share and found the value of the remaining Bitcoin to be mined that they will mine at a current control rate of 21%, and I come up with a ratio of 1.06 currently. So to simplify this even further, I know this is a little complicated. I'll simplify this and make it look more pretty again for the members. But what this is telling you is the total sum of the 14 largest publicly traded companies and their market caps is greater than the notional value of the remaining Bitcoin that can be mined. So this is a great gauge of the sentiment of retail investors and institutional investors when it comes to buying or selling Bitcoin mining stocks. Because this tells you how many dollars of value the markets are assigning per dollar of the value of the remaining Bitcoin to be mined and what these companies, their share of that will be. This is actually quite interesting because if you track this back, It tells you exactly when you should have been buying these companies and exactly when you should have been selling these companies. The historical average or ratio is 0.75 or 75%. Right now is the yellow bar on this graph. We're at 106%, which technically means investors in the public Bitcoin mining space are greedy. They're not fearful. They're certainly not fearful, and they're likely greedy. Now, again, what's important to note is this can change very quickly based on what the current price of Bitcoin is. If Bitcoin goes to $80,000 tomorrow, which we all know is possible, it randomly does this sort of stuff, then this ratio is going to change. So I don't like to look at this ratio and this model, I guess you could call it, every single day because this can change every single day. What I like to do is I like to find the average per month and chart it out. And you can see at the end of December 2022 was the lowest reading, 28%. The total market cap of these publicly traded companies was only worth 28% of their share of the remaining Bitcoin at that point in time. We can track this back by looking at a Bitcoin mining stock ETF, which just shows you a basket of these companies and when they were the cheapest, when they're the most expensive from a stock price standpoint. Well, if we track this back to December of 2022, this was the low. And this feeds directly into my thesis that fear and greed and investor sentiment matter so much more to this space than actual business fundamentals do. Again, don't get me wrong, business fundamentals matter. That's why CleanSpark has outperformed so tremendously. But just for fun, let me see what the ratio said for July of 2023. For July of 2023, we had a reading of 108%, meaning investors were more on the greedy side of things. And again, it ended up being a pretty good time to sell. So I just see based on this model that the low was in October of 2023 when this ratio bottomed at 64%. Let's go to October of 2023 for the ETF. Well, I'll be darned. October of 2023, another bottom for these Bitcoin mining stocks. And then ever since December of last year, the ETF is kind of flatlined. I guess it's down 24%. And you'll actually see a very similar pattern on my model here, where in December of 2023, it shows that these companies were overvalued just based on investor sentiment. It would have been another good time to sell. And we've kind of hovered above the average of 75%. And again, if you look at today, which this can change every single day again, investors are on the greedy side. Now, I do want to be clear. We can look at any model we want, and no model is perfect. There are flaws to this model that I've created for myself as well. Although I will say I like it a lot because the assumptions I make are much more factual. They're less assumptions and more facts, if that makes sense. That's why I like it so much. And it still gives you a good reading on investor sentiment in this space, which again, with small cap companies, investor sentiment and risk appetite of investors is everything. But at the end of the day, kind of like I was saying earlier, if you believe that Bitcoin's going to $1 million by 2030, you shouldn't look at any model. I don't even care if it's the one I just showed you. You should ignore it. You should absolutely ignore it because your thesis is that Bitcoin's going to perform greatly. And as a result of that, any investment you make should perform greatly. And that's regardless of whatever valuation methodology or metric you use right now. If Bitcoin goes to $1 million, you're going to be glad that you were buying Bitcoin mining stocks today when you're sitting here on May 2nd of 2030. You will be extremely grateful, extremely glad you did so, even if other people were telling you it was overvalued. And I find myself in this camp. I am a Bitcoin believer. I've been a Bitcoin believer for a very long time. If you're not yet sold on Bitcoin, I highly encourage you to read The Bitcoin Standard. It's a book. I have a link to it down in the description down below. Get your hands on that. Do yourself a favor. However, again, if you don't believe in Bitcoin and after reading that book, you still just can't see it, don't own these companies. If you don't believe in Bitcoin, and you could be right that Bitcoin could fail. I'm not oblivious. I'm not a perma bull on Bitcoin. I'm not oblivious. This thing could fail. And if it does, all these companies will have ended up being way overvalued. So suffice this all to say that I think when people try and use traditional valuation methodology for these companies, they're making a big mistake because this is an industry that is unlike any industry we've ever seen before. We don't have a benchmark that we can look at and say, oh, they're overvalued right now, or ooh, they're undervalued right now, other than what these companies have been valued at historically, which is exactly what my model tells you, what these companies have been valued at historically. That's the only benchmark we have. You can look at current cash flows all day long and say, ooh, these companies, they're not healthy. They're overvalued right now. But if Bitcoin succeeds and goes to $1 million per coin, you're going to regret saying they were overvalued. So to answer the question, should you sell your Bitcoin mining stocks? Based on my model, yes. Based on everybody else's models that have come into this space using traditional methodology, yes, they're overvalued. You should sell them. But based on what Bitcoin's potential is, should you sell them? Probably not if you believe in Bitcoin. And that's just because these Bitcoin mining stocks being leveraged plays, well, they'll always be leveraged plays because they're risky. They add another element of risk, and it's a self-fulfilling prophecy. If investors believe something, they're going to continue to believe that thing. But on the other side, would I buy these companies because their business models are good? Absolutely not. Absolutely not. The business models are terrible right now. Mining economics are not good right now. They're the worst they've ever been historically, and that is a fact. Now, one last note I want to put into this video is that, yeah, you have two different companies. Companies that dilute to raise their money to grow more, which it sucks as investors. You have to trust that the management team's going to make accretive acquisitions, accretive growth moves, and that doesn't always happen. If that doesn't happen, you suffer as a shareholder. And there's the other group that chooses to sell their Bitcoin. For me, the upside, the floor in valuations for these publicly traded Bitcoin mining companies comes from the potential upside of their HODL balances, which is why I'm not a fan of companies that don't have HODL balances, and I'm not a fan of companies that choose to sell their Bitcoin, because I think, again, that beta, by owning these companies, that potential upside actually comes from the Bitcoin that these companies hold. And it seems like I've gotten this right too in my thinking with the HODL balances, because the two best performing companies, which again are my two favorite Bitcoin mining stocks, are the only two I've ever considered owning, Cypher Mining and CleanSpark. They're the two best performing stocks this year. And the only reason for that, I think, is because they have a HODL balance. They're holding on to their Bitcoin, and they are very well run companies. Their operations are better than everybody else listed on this sheet here, and they are 100% focused on Bitcoin. They are the only two remaining pure Bitcoin plays. All of these other companies have other business segments, which I think will cost them in bull markets, but I think it will provide a floor during bear markets. Another way to put that is I think they will underperform in bull markets and outperform during bear markets. But if you want the real return, I think it comes from CleanSpark, and I think it comes from Cypher Mining, because 100% of their energy and effort is put into Bitcoin mining. They have a HODL balance, they have very little debt, and they're very well-run companies. So for me, even though my own model is telling me that these companies are overvalued right now, I'm not selling them because I believe in Bitcoin long-term, and I believe that I can capture gains in this industry that you can't find anywhere else in the market. Even the gold mining sector, because Bitcoin itself has such better price appreciation opportunity in front of it than that of gold. With that, I'm going to end this video here. If you're new here or returning, not yet subscribed, please subscribe down below. We have one of the fastest growing stock market YouTube channels out there. I'm incredibly blessed. I'm thankful every single day that I get to wake up and do what I love. I'm always, like I said earlier, I'm 100% self-funded. I'll never take a sponsorship because I want to remain independent, and I think you guys value my independence as well. So your monthly support does mean a lot to me. With that, I hope you have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.